Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the market. So the FOMC decision just came out, the interest rates were paused, and the markets have not had a positive reaction to this. We're seeing a breakdown in the lower timeframes for the equity markets. Bitcoin is plummeting to the downside of new bearish patterns, and we've also got some updates to talk about in the total cryptocurrency market cap and the altcoin market cap. Things are not looking good right now. Let's dive into the Fed commentary first and discuss the interest rate decision. So in terms of the interest rates, like we said, they were paused at a rate of 5.25%. After the interest rates came out, Powell came out, gave a speech, and here are the main takeaways from the speech. So Powell basically said it may make sense for rates to move higher, but at a more moderate pace throughout the year of 2023. This is in accordance to Powell and all policymakers who view that further rate hikes this year are appropriate. Policymakers' median rate forecasts are rising to 5.6%, implying there could be a further 225 basis point increases throughout 2023. Powell stated they're not seeing a lot of progress in regards to core PCE, and Powell even stated it may take a couple more years before the interest rates are cut. Now, I personally think this is just an exaggeration to stop the equity markets rallying further against the Fed's interest. But I personally think, like I've been saying on the channel, we're probably not going to see rate cuts in 2023. So how have the markets responded to this? Let's start off on the equity markets, the bond market, and the option market, and then we're going to quickly head over to what's happening for the cryptocurrency markets because we are seeing some breakdowns and I want to get this video out as quickly as possible. So in terms of the DXY on the channel, we've been updating you on this fib channel parallelogram. We quite recently took a huge tear to the upside and we have been breaking down for the past week or so. Now you can see today we did nuke after the FOMC decision. In fact, we were pretty much breaking down before that anyway. But as you can see, we've beautifully backtested the 618 and we have had a relatively strong impulse to the upside. So in my opinion, as long as the DXY remains above 102.2, around about 102 really, I do remain short-term bullish on the DXY. Now let's talk about the equity markets. Now the S&P 500 is acting a little bit more jumpy right now. You can see this is where the interest rate decision came out. We're on the 15-minute time frame and we immediately had a nuke to the downside. We started to reverse back up and then kind of round about the end of Powell's speech, we've kind of been getting stuck against the 15-minute EMA ribbon. So, you know, in general, things look pretty shaky in the lower time frames. I wouldn't be trying to do technical analysis on this or anything. But in the higher time frames, as we've been warning on the channel, there is a major divergence happening right now. And there is a price gap, which is of major interest to me down here at 4,300. Now, before we move on to the cryptocurrency markets, I want to have a very short segment on divergences. Now, if we're looking at the S&P 500 and we're looking at the DXY, what we're going to do is we're going to invert the DXY because as we know, the S&P 500 and the DXY are inversely correlated. So if we invert the DXY, we're just going to see a positive relationship. As we discussed previously a second ago, we were looking at this fib channel parallelogram over on the DXY, and this is the same fib channel parallelogram but just flipped over on the S&P 500. Now on the channel, we've been discussing how inverse DXY has been breaking down from this channel. Of course, this is because the regular DXY on this fib channel parallelogram has been breaking bullish. But what is happening right now is a monumental divergence between the S&P 500 and the DXY. Now, as the regular DXY ticker symbol is breaking up and holding the 618 as support, I continue to see that the regular DXY is going to get continuation back to the upside. And of course, this would mean that the inverse DXY retesting the 618 fib is probably likely to move back down to the downside. And hopefully this should snap back the strong correlation between the inverse DXY and the S&P 500. Once again, as we will discuss in a second, the S&P 500 is seeing a lot of divergences right now, and at least in the immediate short term, I'm not trying to chart the 15-minute time frame. I'm really looking at the daily and the weekly, and I'm seeing a big price gap down at 4,300. And as we are diverging from many different markets, this is what I've got my eyes on. The S&P 500 is also diverging from the bond market. Now, typically, iShares TIP ETF going down, 2-year government bonds going up, 10-year government bonds going up, which is what we're seeing right now, is bearish for the S&P 500. You can see a very, very clear linear relationship where the iShares TIP ETF tops out, and it always tops out before the equity markets. And as you can see right now, we're seeing the same divergence that we normally see, but it's on a much greater magnitude. What you're seeing is the S&P 500 completely rally against the iShares TIP ETF. If we just come over to a regular candle body for the iShares TIP ETF, you can really see right now that we are pretty much at the bottom of this bear flag and we are looking pretty bearish. And once again, this is just one other divergence to keep your eyes on, which could insinuate that the S&P 500 is far overbought right now and should be starting to come back down to the downside. So we just talked about the equity markets diverging from the dollar. The equity markets are diverging from the bond market. The equity markets are also diverging from the options market. We've talked about this chart before. This is a Bloomberg chart to gauge options sentiment. What you can see to the downside, just focus on the blue line to the downside here. This is the put to call skew ratio. This is basically the amount of puts divided by the amount of calls. Very simple math. When the puts outweigh the calls, you obviously see an increase in this ratio, meaning far more people in the options market are taking out puts, and this is bearish. High put to call skew is definitely a bearish signal. You can previously see how the tops in the put to call skew ratio have pretty much always called for tops in the equity markets. Now, we did see one minor divergence over here where the put to call skew ratio actually topped out and the equity markets went up for one higher high before breaking back down to the downside. But every other time you've seen a top in the put to call skew, and then you see a breakdown, top, breakdown, top, breakdown, top, breakdown. And once again, we're seeing these divergences which do not happen too often for the S&P 500, but they do happen. So yeah, with the S&P 500 and the equity markets in general diverging against the DXY, the options market, and the bond market, this leads me to believe that equities should be coming back down very soon. Now, probably what most of you came to click on this video for, what is happening right now for the cryptocurrency markets. Now, just before I started recording this video, it didn't look like there was too much to talk about. If we come over to the 15-minute time frame, you can literally see, we've just started a new 15-minute candle, but literally 15 minutes ago, Bitcoin took a huge plunge to the downside. And this is basically what I was going to talk about. If we clear up a few of these things happening on the chart right now, what I can see playing out for Bitcoin is something similar to a bear flag. I'll stick with me on this one. First of all, similar to a bear flag doesn't necessarily mean bear flag. If I'm drawing this poll, yeah, this really doesn't look like a picture perfect bear flag to me, but what have we got? We've got a breakdown to the downside and then a channel which we have now broken to the downside. While this isn't a picture perfect bear flag, and I would argue this isn't really a bear flag at all, I would still say that the general market sentiment would be bearish. You've had a breakdown, consolidation zone, and then a further break back down to the downside. But while I'm not going to give you a price target associated with this particular chart on the Bitcoin breakdown, let's come over to the total altcoin market cap. Here we go. You're seeing the same consolidation, but this is undoubtedly a bear flag. You can see from the high down to the low, beautifully reverted back into the golden ratio and got pushed back down to the downside. You can see that the total cryptocurrency market is absolutely melting right now. Bear in mind, this is on the 1 hour time frame. If we come over to the 4 hour time frame, there's definitely an argument to be made that you can draw it from all the way up here. If we come over to the daily time frame, really not a big fan of how this looks on the daily. So I would be saying draw this on the 4 hour or draw this on the 1 hour. Personally, I'm going to go for more of a conservative approach and look at what's happening on the 1 hour time frame. And you can see if we do get continuation on this breakdown, really I'm looking at a breakdown of about 7% to the downside for the total cryptocurrency market. From where I'm recording right now, it's around about 5.5% drop. Now, while we're seeing this bearish breakdown in Bitcoin and also in the total cryptocurrency market cap, if we're coming over to the altcoin market, once again, you're seeing the exact same thing. But here's where things get even worse for altcoins. What is the breakdown from where we're currently at right now for the altcoins? 7%, and if we come back up and retest the breakdown, about a 9% drop to the downside. But look, forget the 9% drop for a second, because here's where things can get worse. We've got a bearish consolidation pattern right here, right? So we've got a bear flag. You're looking at the EMA ribbons. They've just fired short. And it's the same on the total cryptocurrency market cap as well. Just fired a 1 hour short signal. And if we do come back over to Bitcoin, 1 hour short signal has been fired. So this could be letting us know we could definitely be getting continuation. But while I expect Bitcoin to break down and the total cryptocurrency market cap to break down, I expect things to be a lot worse for altcoins. Now, just to make this a little bit clearer for you, I'm going to delete what's happening right now on the bear flag, and I want you to notice this red trend line right here. let's see what happens when we zoom out to the weekly time frame. This is something I've been warning you of on the channel for quite some time now, and we made a re-update video on this the other day, 3 days ago. Monumental warning to altcoin holders. You can see in the thumbnail, this is the exact chart that we were looking at. If I can come back over it, you can see what we've got here is the bull market top for the altcoins. We came down, hit this trend line, confirmed it as resistance, confirmed the trend line was valid, and then broke back down to the downside. Come all the way back over to April of 2023, and you can see we broke out of this region. We went on a short-term rally, we came back to backtest it, we backtested it for weeks and weeks on end, before in the past week or so we broke to the downside and closed a weekly candle beneath this support structure. So this is really what I want to warn you of. Yes, I'm showing you a 1 hour bear flag, and this isn't the end of the world in of itself, but in higher time frames, it's a bearish consolidation pattern that we've broken to the downside of underneath this huge macro structure. In my opinion, I really think the altcoin market is getting ready to break down to new lows very soon. Where would I be targeting? Well, in the immediate short term, from a technical perspective, the first target I would look at is this 786 Fibonacci down here, around about 400 billion. That would be a 21% drop. But here's where things get pretty ugly. If we kind of come back over to the screen, you can also see, where the previous bear market lows were, we're pretty much retesting the all-time high. And if we're looking at the volume in this market right now, let me just drag this to the side so we re-update the volume profiles. You can kind of see that we really don't have that much support until we come all the way down to 350 billion. So not too much of a bigger move to the downside, but it is about a 31% drop to the next macro leg to the downside. This is kind of what I'm predicting right now. So maybe a bounce down 31%, retesting the 786, and at which point we can re-update the markets. But lower time frames, like we just talked about on the 1 hour, things are looking bearish, and it's really not the 1 hour that's the main focus that I'm trying to point out here. It's the fact that we're getting these 1 hour breakdowns underneath major resistance, and this could allow for continuation in the macro. Now let's dive into a few more Bitcoin charts, because obviously this 1 hour bear flag is not all I'm going to leave you with today. First of all, I do want to highlight, we literally made an 18-minute long Bitcoin video yesterday. This was extremely in-depth, really just focusing on Bitcoin. My thoughts haven't changed on there, and I presented many more charts and many more opinions. So if you haven't watched that, make sure to go over and watch it. I'm going to fly through the rest of the charts for Bitcoin, but there is one new chart for those of you who did watch yesterday's video, and this is what I've noticed playing out right now over on Bitcoin. If we come over to the daily time frame, you can see a falling wedge. Now, typically from a probability perspective, these have a higher likelihood of breaking to the upside. And if it does break to the upside, you can see the technical pattern all the way up here would be 31,000. Some people draw the price targets to these a little bit different. Some people draw it like this and then draw it from the breakout. That would be slightly different. Some people even draw it like this. This is pretty much at that point in time a bullish pennant. I would personally draw it to the top of the wedge, but in my opinion, things are looking a little bit shaky. And of course, from a probability perspective, just because there's a higher likelihood from a technical perspective doesn't mean it will play out every single time. And with the rest of the charts we're going to look at in a second, you'll see why. First of all, if we look at where we are right now, we are back testing this 25,500 support. Now, I've presented many price targets down here around about this 25,000 range, which we will re-update in a moment, but you can see we are coming right down to support right now. So if Bitcoin starts losing 25,200, then we could break to the downside of this falling wedge. What would the technical price target of this be? Well, let's say we break down in 2 or 3 days or so. The price target could be all the way down here at 21,300. However, we do have a plethora of price targets down here at 24,000. So I really wouldn't be too surprised if we come down to 24,000, wipe out all the bulls, at which point late bears would get excited, and then we could see a bounce back up to this resistance zone round about 25,200, flipping previous support as resistance and then continuing breaking to the downside. In my opinion, this would be the path of most pain, and as I discuss on my channel quite frequently, you've probably heard me say this saying many times before, the path of most pain is normally the path that Bitcoin likes to follow. So let's wrap up the analysis. Also, on the weekly time frame, you can see we're getting continuation down just like we predicted after that bearish MACD cross. On the week commencing the 5th of June, we highlighted that we got this bearish MACD cross, and as you can see, pretty self-explanatory. When this normally happens, at least since 2021, we've seen 49% drops, 42% drops and 56% drops. The most conservative drop we saw was a 42% drop, and ladies and gentlemen, we're only down 6.4% after this MACD cross. This is really just another signal letting me know that we've got more room to move to the downside. And very quickly, before I re-update my price targets on Bitcoin and let you know where I think we're going in the immediate short term, I really just have to hammer this in. I know if you're a veteran of the channel, you're probably absolutely sick of this chart, but it is monumentally important. And for those of you who are new, if you haven't seen this before, this is the most important Bitcoin chart in my opinion. We've been highlighting this major support and resistance box. This was support here, support here, support here, flips as resistance. You can see we back tested this quite recently on the weekly time frame, and it flipped as resistance very strongly. To the upside, you can see 28,000 has been a monumentally strong level of resistance. And if we come to the downside, you can see we're losing all of the most important moving averages. The 200-week moving average is up here at 26,500. If we come over to the 4-hour time frame, you can see we've retested this as resistance and we've moved back down. You can also see in the past hour, we've had a strong impulse to the downside from the weekly EMA ribbons up at 25,800. And the bull market support bands, also at 25,800, have just been lost as support. So really, what I'm seeing in this most important Bitcoin chart is we are underneath a monumental level of resistance, and all of the most important moving averages that have previously held us up as support are now being lost. And because of these reasons, my friends, these are why I'm really targeting these price targets to the downside in the immediate short term. Like we said in this chart over here, we've got a support range round about 25,000. And if we come over to our price target chart, you can see we've got a mini CME gap down here that needs to be filled at 24,860. To the downside from there, we've got head and shoulders at 24,100. We've got a CME gap down here at 20,300. And this structure is also very reminiscent of a BART, with a price target down at 19,500. Diamond top formation, price target down here at 24,500. Like I said, in some of these charts, round about 24,500, 25,000, these are magnet regions. There's so many price targets, and literally as I'm recording this video, you can see Bitcoin is coming right down to the bottom of the wedge. Things are starting to look shaky. Once again, remember, 25,200. If we break to the downside of that, we might not even retest these 1-hour bear flags. We may just continue to absolutely rocket to the downside to the price targets that I've been highlighting. Once again, one of the major macro ones is this falling wedge with a price target down at 21,300. Just some food for thought. I know there's a lot of price targets there, but I just wanted to let you know, zone by zone, this is kind of what I'm thinking is going to be happening with the markets. On the daily, this is my prediction. I think Bitcoin is going to break down to support around about 24,200 down to potentially as low as 23,700. I think a short-term bounce could happen at that point back up to 25,000, retesting this as resistance before continuing the descent to the downside. Does the bounce have to happen? No, it doesn't have to happen. We could just come all the way down to these price targets. We've been overbought for quite some time now, and with all of these divergences happening in the equity markets, I don't think it's too long before the SP 500 plays catch up with these divergences, and at that point the next macro move for the equity markets could be here, and Bitcoin could see a sharp move to the downside. So for today, my friends, that's all I've got. Bitcoin is moving down strongly. The equity markets aren't moving down too much today, but yeah, I'm seeing a lot of weakness in Bitcoin right now. I'm seeing a lot of weakness in the total cryptocurrency market cap, and also specifically the altcoin market cap. If you're holding altcoins right now, I think you're about to understand the definition of pain. But yeah, we'll leave it here. That's all I've got for you today, my friends. If you do enjoy the content, make sure to let me know down below by leaving a like and a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Follow me over on Twitter at 618_cowboy. That's all for today. It's been your boy Cowboy Trades. I'm out. Peace.